Today's top stories at NBR. Westpac Banking Corporation launches share buyback. A group of Aramex couriers threatens legal action. Auckland International College to close its school gates. And there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Monday, November 1st. I'm Paul Brennan. Thanks again for joining us. Foodstuffs and Woolworths have dismissed suggestions for structural separation and asset divestments as extreme and unreasonable remedies to competition issues that they believe have been overblown. The grocery companies continue to downplay the existence of a duopoly in the grocery market during another session of the Commerce Commission's Grocery Market Study Conference today, Monday, centred on potential operational and structural separation and divestment of parts of their businesses. Representatives of both companies put heavy disclaimers on their discussion of the topic today, Monday, saying much more cost-benefit analysis work would need to be done by the Commission before such topics could even be debated properly. They said separation, either operational or structural, of wholesale and retail businesses would be costly and result in higher unit costs, as would divestment of any assets. Westpac Banking Corporation has launched a share buyback of up to Australian $3.5 billion, reflecting the economic rebound from COVID-19 and its strong capital position. The announcement came as the bank reported a 56% lift in New Zealand cash earnings to $1.01 billion for the 2021 year, thanks to a significant improvement in expected bad debts. Its Australian parent delivered a doubling of cash earnings to Australian $5.35 billion for the full year. The buyback of Westpac ordinary shares is open to all eligible Australian and New Zealand shareholders. It will be conducted via an off-market tender process that opens on November 17 and closes on December 17. NZX-listed seedling business Arbigen Holdings has agreed to sell its New Zealand and Australian businesses for $22.5 million, with plans to invest further into the Americas. The US-headquartered business will sell the division to Geyser Limited Partnership, a consortium of investors led by businessman Hugh Fletcher, who retired from the company in June 2019 when it was known as Rubicon. Fletcher was formerly chief executive of Fletcher Challenge, a former division of the family's NZX-listed Fletcher Building, of which Rubicon was a subsidiary. Arbigen said the sale had come about as a result of the strategic review undertaken by PwC after the company turned down a highly conditional takeover offer for the entire company in June. A group of Aramex couriers is threatening legal action against the United Arab Emirates-based company over what it says are poor working conditions and below minimum wage pay. The 23 franchisee drivers, who mostly have English as a second language, say they're forced to work up to 13 hours a day at rates equaling to as little as $10 an hour. The group is backed by advocacy body ProDrive, which conducted a study of 11 Aramex courier runs on Auckland's North Shore over the month of April. It found that once operating costs such as the van and equipment were taken out, the average hourly rate was $12.78 before tax. One of the couriers worked 12-hour days for $10 an hour. The most any of the couriers earned was $17.63 over a typical 9.5-hour working day. Auckland International College, AIC, announced today it would be closing its school gates, with current students leaving by June 2023 due to the uncertainty posed by New Zealand's COVID-19 pandemic response. The independent day and boarding school, based in the Auckland suburb of Blockhouse Bay, is the sole school in the country that only offers the International Baccalaureate Diploma program. Founded in 2003 by Japanese education company Oshu Corporation for more philanthropic than profit-driven motivations, the college has boasted high levels of academic success, including achieving 100% IBDP student pass rate in 2021. IAC Council Chair Nigel Burton said the impact of travel restrictions and ongoing lockdown measures has seen the roll fall to 136 students across years 11 to 13. Fund manager Nicholas Bagnall has launched a retail and wholesale version of the global equity portfolio he manages for ACC through his firm Te Ahu Mairangi. Documents filed to the Disclosed Register indicate the new fund will charge annual fees of 0.64% with a minimum initial investment of $100,000 and a target investment mix of 98% global equities. Bagnall, who manages just over $2 billion for ACC, said the new fund would have a similar strategy to the ACC portfolio. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR and Margin Call this week, Richard Stubbs says the bond market is a reminder of market fragility, while Nicola Shepherd's entrepreneur profile this week is accountancy founder Wendy Taji. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here again from 5:30 tomorrow for another NBR Today.